PayPal's not a momentum story anymore. It's finally dropping down into a range where it looks like institutions may be stepping in. We're going to break it down for you in just a second, right after a quick 30-second clip on our weekly educational service, Clarity. If you love our videos, you're going to love Clarity. Stick around for the PayPal breakdown after this. This clip is a supplement to Clarity, our weekly educational service. Each week, we break down the hottest trades with a top-down view of the sector and related peers. Then we do a deep dive into our spotlight, our featured analysis using the institutional business cycle. As our guide, every issue includes bullish and bearish scenario, as well as trade considerations for all of the charts that we covered. It's not investment advice, but it's how we would handle trades if we were in them. If you like our videos, you're going to love Clarity. There's a QR code up in a second that'll get you 10% off. See you back here on the Trading Couch next. PayPal is no longer a momentum story. The real question now is whether this reset has finally reached a range where institutions can begin rebuilding a new campaign. I'm Brent with Trade Therapy. Welcome back to the Trading Couch. This week in Clarity, we spotlighted PayPal. And what we were watching was when a former support shelf fails, then the edge shifts from buying weakness blindly to waiting for institutions to show up and prove that they're willing to defend the next campaign. You need to see a bottoming process beginning. And a lot of traders get trapped right here. They see a stock that looks all washed out. They see a sharp bounce. They assume the bottom's in. But in these deep corrective phases, they don't become investable just because price looks cheap. They become investable when the chart shows real transfer, real support, real rebuilding type behavior.